Hey everyone, welcome back to the channel. I'm your host Ian, and today we're diving into an interesting topic, co-op housing, especially from the 1970s era. We're also going to take a quick look at some alternative ownership models that have shaped our landscape and take a quick look at fresh ideas being discussed to tackle affordability challenges in today's market. Let's jump in. First, let us talk about the cost-benefit analysis of those 1970s co-ops in Canada. Back in the 1970s and into the 1980s, Canada was in the midst of a real push for affordable housing, driven by federal programs that funded nonprofit and cooperative developments. Between 1973 and 1994, we were building or acquiring around 16,000 affordable homes a year through these initiatives. It was a time when government saw housing as a public good, inspired partly by models from places like Scandinavia, where mixed income projects helped integrate communities. The key program here was something called Section 56.1, which ran from 1979 to 1985 and supported mixed income co-ops. In a co-op, residents don't own their individual units. Instead, they buy shares in a corporation that owns the whole building, giving them a say in how things are run, like maintenance and fees, kind of similar to a condominium. Economically, the costs were front-loaded for the government. Federal funding covered low-interest mortgages and subsidies to keep operating expenses down, which meant taxpayers were investing upfront. But the benefits? They were huge and long-lasting. Co-ops provided stable, affordable housing. Rents, or housing charges as they were called, grew much slower than market rates. A recent study looking at data from 2006 to 2021 in cities like Vancouver, Toronto, and Ottawa showed co-op rents were consistently 25 to 33% below market averages, with the gap widening over time. For example, in Toronto, a two-bedroom co-op townhome might cost just over $1,000 a month compared to almost $2,000 on the market, saving residents hundreds monthly. That affordability came from a break-even model. No profits to chase, just covering costs. Plus, there were social perks, lower turnover rates, stronger community bonds, and even health benefits from the sense of belonging and control. Studies have shown co-ops build social capital, where members support each other, and they often maintain buildings better because of the resident involvement. Politically, this was a win during a period of economic growth and urban migration after World War II. Co-ops helped avoid the pitfall of concentrated poverty seen in some public housing projects by mixing incomes. Higher earners subsidized lower ones through tiered charges. But by the 1990s, things shifted. Under Prime Minister Brian Mulroney's Conservatives and the Jean Chrétien's Liberals, federal funding was slashed as part of a broader austerity measure to fight deficits. Responsibility got downloaded to provinces, and new builds dropped from 16,000 units a year to just 1,500 by the mid-2010s. Why? Well, the neoliberal ideas took hold, prioritizing home ownership and market solutions over collective models. Landlord lobbying played a role too. Co-ops undercut profits by offering cheaper alternatives. Today, those 1970s co-ops are still going strong with waitlists years long, proving the model's endurance. But the lesson? Government investment pays off in affordability and stability, even if it requires upfront costs. Now, shifting gears to alternative ownership models that have been tried in Canada, some successful, others not so much. Co-ops themselves are one of the big successes, as we've discussed, but let's broaden it a bit. Shared equity models have gained some traction as well, where a nonprofit or government shares ownership to make entry affordable. Take Options for Homes in Toronto. They sell condos at cost with a second interest-free mortgage covering 15 to 25% of the price. When you sell, they take a share of the appreciation, and that money revolves back into more units. It's helped build over 900 homes without heavy subsidies, targeting moderate income folks who can't swing a full market price. Similarly, home ownership alternatives in Toronto has financed over 2,000 units since 1998, using shared appreciation mortgages to keep prices 10 to 15% below market. Defaults are under 1%, and it builds equity for families while recycling funds. pure economic efficiency. Community land trusts, or CLTs, are another winner. In Vancouver, the CLT holds land in trust, leasing it long-term to keep homes affordable forever. They use cross-subsidies, where higher rents from some units fund lower ones, and partnerships with cities for discounted land. It's created mixed income rentals that stay affordable, avoiding speculation. Habitat for Humanity is a classic too. Families contribute sweat equity, get interest-free mortgages, and the model has built thousands of homes across Canada with volunteer labor and donations. Success comes from community buy-in and low costs. On the flip side though, some models have really stumbled. Pure public housing from post-war era, like Toronto's Regent Park in the 1940s, started strong, but often led to concentrated poverty when targeted only at lowest incomes. Without mixed incomes, maintenance suffered and stigma grew. Politics shifted away from it in the 1990s as well. Housing First, rolled out in the 2010s, aimed to house the homeless without preconditions but failed in sustainability. Without ongoing support, many returned to the streets, costing governments more in the long run. Experimental communes or self-builds without proper funding have fizzled too, like some rural attempts in the 1970s that lacked infrastructure. And those rent-to-own opportunities, well, they've worked in some spots, but risks like market fluctuation can leave buyers underwater if values drop. Laneway suites and prefab homes are starting to become an emerging success, though. In Toronto, zoning changes allow backyard units, adding affordable rentals without new land. Prefab, like modular builds, cut costs by 20 to 30% through factory efficiency. But overly restrictive zoning has blocked many alternatives, leading to supply shortages. Finally, let's take a moment to explore other ideas floating around Canada for housing affordability, especially in the 2020s as prices have skyrocketed. The federal government's housing plan from 2024 is ambitious. They're pumping $15 billion into low-cost loans for apartments, aiming for 131,000 units by 2031, and removing GST on rentals to spur building. They're also leasing public lands for homes. Think old military bases turned into communities, and pushing prefab factories, 3D printing, and mass timber to speed up construction while cutting carbon. Provinces are in on it too. BC is overriding local zoning for density, allowing fourplexes as of right near transit. We've also been getting a lot of great ideas from think tanks and experts. Maclean's outlined 25 fixes like converting empty offices into apartments. Calgary is doing this with subsidies, turning vacant spaces into homes. Tiny homes from shipping containers have really been skyrocketing as well, or platforms matching spare bedrooms to renters. Training more tradespeople through apprenticeships to fix labor shortages, or high-speed rail to connect affordable suburbs to cities are also important. The blueprint for more and better housing calls for 5.8 million homes by 2030, legalizing density, scrapping parking minimums, and investing in factory-built housing with tax breaks. OECD surveys suggest tax reforms like shifting from property taxes to land value taxes to discourage speculation and boost supply. Politically, it's about collaboration. Federal incentives like the Housing Accelerator Fund reward cities for rezoning. And don't forget green angles, energy-efficient retrofits to lower bills, making homes more affordable long-term. The challenge though? Well, implementation varies by province. But these ideas show creativity. From rent-to-own expansions to co-housing revivals aimed at restoring affordability to 2019 levels or better. Wrapping this up, co-op housing from the 1970s teaches us that collective models, they really can deliver real economic benefits, like sustained affordability and community strength, but they need government backbone. Alternatives like shared equity and land trusts are proving resilient, while failed ones remind us to mix incomes and plan for sustainability. And with all these ideas bubbling up, Canada is at a crossroads. Politics will decide if we build enough to make housing a right, not a luxury. Like and subscribe for more deep dives into Canadian housing. Thanks for watching, and I'll see you on the next one.